Yo, what's up? Stealth to Wealth fam, back with another video. As you can see, I am very ecstatic and excited here today to give you guys this knowledge. We are all here to invest in ourselves and our future selves. So before we get into the video, I have one thing. We have some big things in the work for the channel. If you have been staying tuned to our Instagram, you might have seen from previous stories that there is something very special on the way for all of our subscribers, but we'll get into that later. So today for the topic of the video, we are explaining what is support and resistance. So the most asked question for stocks, including stocks and just investing overall, is when is the best time to buy a stock? And how do you know when the best time comes? Well, to know that, you have to understand what we call support and resistance. So what is support? Support is a level at which a stock is on a fall, and once it reaches a certain level, it bounces from that stock. It bounces from that price. So as you see, follow my mouse. This stock is having a fall off, fall off, fall off. But as soon as we get to this support area or demand zone, it bounces right off of it. Same thing again, bounces right off of it, bounces right off of it. So think of this as supply and demand. Think of your support as demand and your resistance as supply. So support is just all it is there are a lot of buyers stepping in at this area, not level, area, because we can't accurately predict where the stock is going to bounce or reject every time. So we can predict an area, but we can't predict an exact price. So there are buyers stepping in at this area, taking over the price and sending it back up. So support levels or area is a good place to buy or start your entry. So let's break this down with an example. Here, we are trading SPY on the 1 hour time frame, meaning each candlestick represents 1 hour price action. So here we have our blue demand area drawn, and it's not a line. Oftentimes you'll see traders with one line representing where a price might bounce, but it is impossible to predict where a price is going to bounce. So we use an area or a zone. So here, follow my mouse, we see a little sell-off. We bounce right off of it. Why? Because there are buyers stepping in at this area or zone, meaning they're going to send the price opposite. A lot of sellers. Oh, it goes past the zone, but that happens. You're not going to catch every trade. Remember, that's why we have an area, not a zone, because we can't accurately predict a certain price. So once again, comes down, touches, we see a bounce. Comes down, touches, we see another bounce. Comes down, touches, we see another bounce. So you get the idea. Whenever there means at this level, there is a lot of buyers at this zone, which creates an imbalance, sending the stock up or reversing from its fall off. So you may ask, well, what is the opposite for sellers? This is what we call resistance. Resistance is a level in the market at which the price can no longer go higher. So as you see in this picture, we have a rally in this stock, but once we get to this black line, we fail to go higher, and we see a sell-off. We test it again, but fail to go higher again. Well, we consider this resistance or like as a ceiling. We can't go any higher. Support is the bottom or where it'll bounce from. Resistance is the ceiling. We can't go any higher. So resistance is just where the stock can no longer go higher. Same thing for support. Buyers are stepping in. Resistance, that means sellers are selling their shares at this price because they may think the stock is overvalued at this level, creating another imbalance, which will send the price reverse in its opposite direction. So in simple terms, resistance is just where the stock can no longer go higher, and support is where the price can no longer go lower. So to break resistance down with an example, here we have our supply zone. So our supply zone, because there's a lot of supply is at the top, demand is at the bottom. When there's a lot of supply, that means the stock will decrease, or whatever asset, it will decrease in value. Same thing with the stock. We have a lot of sellers in this area. As you may ask why. Why is there a lot of sellers in this area? Well, let's look at all of these wicks. Follow the mouse. We have one wick here. As soon as we touch this level, we reject off of it. Why? There are sellers sitting here. Same thing. We break up a little bit, but we come back down and test this level. And look at this large sell-off. Why? Because there are so many sellers sitting in this area waiting to sell their shares. So we see a huge sell-off. Same thing. We come back up and test this level again. Sell off. Well, you may ask me, well, Charles, how do you draw a supply zone or a demand zone? Well, look at where there are a lot of wicks. Wick 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And look at how the price moved off of these wicks. Huge move. See a move, huge move back down. Another huge move. So when these levels are respected and when you can find these levels, that means there is an imbalance created, which would allow for stock to reverse and go back down.